Good afternoon. We are live. Craig, how are you today?
I'm good, Sean. Thanks for having me on. I appreciate you and everybody over there at Fortis.
Oh yeah, absolutely. I'm not even gonna try to pronounce your last name. I should have asked you. How you pronounce your last name, Craig?
It's Carosa Cavaness.
Carosa Cavanis. That's easy.
Yes, sir.
That's easy. So Craig, I typically start off with a story of some sort, and as you know, this is Sean Williams, and I want to welcome everybody to Lending with Purpose. So this live streaming podcast is all about empowering you with valuable information, resources, and engaging conversations with clients and friends that will help you navigate the world of lending. But Craig, not only lending, but to enhance your life. So I don't have a story today. Um, I don't. We were just sitting here having a conversation about sort of communication and misunderstanding. I personally feel like, Craig, I can solve the world's problems through a text message, like I
Sure.
do. And
Sure.
so the other day, though, so you just actually reminded me because you said the one thing you said is she's more personable,
Yeah.
right? And so that's probably why my son doesn't return any of my text messages because he says they're too long. I write too much because I'm really thinking that I'm personable, like I'm really personable in the way that I write these messages and such. So to me, that works, but I
Yeah.
realize that that doesn't work for everybody. And so thanks for that reminder today. As soon as we finish, I'm gonna hang up and call that young lady and get her on the telephone and have a conversation with her instead of trying to text message. So thanks for that. With that said, Craig, tell us who you are, what you do, and then we'll get into our great conversation today.
Sure. Sure. My name is Craig Carosa Cavaness. I'm a insurance agency owner, a broker, also a realtor, and paralegal, typic. So I kind of wear a lot of hats. But today I think we're here to talk about insurance, and just in the general, just the business and the way that we all can kind of get along and move forward together, in a respectable, compassionate way. If I'm right.
Yeah, yeah, definitely.
Yeah.
We will be having that conversation today. And so, yeah, we definitely going to be wearing your insurance hat today. It's good that you understand things from the real estate side. Not quite sure how that paralegal is going to play into this conversation today, but
Yeah.
definitely insurance from a real estate aspect. And so, we'll just hop right into it. Like the let's talk about coverage, right?
Sure.
Um, how's the level of coverage, for homeowners insurance like get determined? Because people out there that are listening, we're always hound is probably the wrong choice of word, but we really want them to take it seriously that we need to
Yeah.
get homeowners insurance.
Yeah.
And I know with us, we try to get that done early on in the process. And so oftentimes questions get asked of us, and we don't want to necessarily answer those questions because that's outside of our scope. We just we need a policy to cover the dwelling.
Yeah. Yeah.
And we generally speaking know about the amount of coverage and things like that. But like what factors should homeowners consider when selecting their coverage limits?
Right, that's a great question, Sean. So I think there's a couple different factors when selecting coverage limits. I mean, you want to look at first of all, you want to make sure that you're looking at everything replacement costs. Um, Most people, have an understanding what replacement cost is, but the difference between replacement cost and actual cash value is just that if you buy a TV 5 years ago for $10,000, and I'm just using that round number, let's say a couch. TV is probably a bad example. You buy a couch for $10,000 5 years ago, and you experience a total loss on your couch today at actual cash value. Every carrier has a formula. They're going to give you whatever that $10,000 plus minus that depreciated value. However they come up with it, every company has a formula. Whereas replacement costs, you're going to pay a little extra for that in your policy premium, but you're going to get $10,000 for that couch today. So one of the first things you want to look at is replacement costs versus actual cash value. Most people, most companies, they're going to do replacement costs anyways. Second thing you probably want to look at is going to be your deductible. That's a very important thing. I try, and I think probably most insurance agents are going to agree with me. You don't want a high deductible. The way I looked at deductibles and the way I feel like most people should look at deductibles is, if I had to call you today and say, Sean, I need you to reach in your pocket and grab X amount of dollars, $1,000, 2,500. Basically, what is gonna be acceptable for you? What is not gonna gut you? And that's the way I always look at a deductible, and that's a huge part, because obviously we don't know when something's gonna happen. That's why we have insurance. That's what it's for. So being able to come up with that deductible, or to know, essentially your loss is going to be minus that deductible, right? If you have a $10,000 loss and your deductible is $1,000, your insurer is going to cut you a check for $9,000. And as long as you're okay being on the hook for the extra $1,000, kind of those are the two most important things I look at. Overall coverage is important, but I think that's more of a nuanced thing that you should leave to your agent, because your agent's going to know and understand, look at the age of your home and say, for example, for me, I mean, if there are certain coverages, like, and I won't get too in the weeds here, but like ordinance, right? So there's an ordinance amount that's set aside, and that's if you're making repairs to your house after a total loss or a partial loss, and you need to update things because they no longer follow Cali ordinances. There's a sense. So if you got a newer house, you don't need to expand that coverage, right? That coverage can be minimal. So there's like nuances, things like that. But I think the most important thing to understand are the deductibles and the replacement costs.
So like for instance, when they're determining how much coverage you need, the
Mhm.
cost of it, things of that nature, like how does an insurance carrier, determine all of that? Like what?
Sure. That's a good question. Everybody has like the proprietary software they use. Most people call it a RCE, replacement cost estimator. And basically for me, I do have the advantage of being able to go online, look at the disclosures, look at the remarks on a home, go to the MLS, look at the home. But we're going to be filling in all the information: roof type, roof age of like HVAC, plumbing, of siding, sizes of bedrooms. We're going to put all the information into the RCE, replacement cost estimate. It's going to spit out a number. And that's what it's saying. Sticks and stones is going to cost to replace your home in the event of a total loss. So say that number is $500,000, then every single coverage that you have is going to be despondent of that $500,000 coverage. So coverage A is your dwelling coverage. Personal property coverage is coverage C, and that's typically always going to be 50%. So it's 250. Other structures, coverage B is going to be 10%. So that's 50,000. So everything works off of that overall number. And it's important. Thank you for asking, Sean, because I think I might have missed this. Important people understand that amount is not going to be the amount that you paid for it, right? If you paid 500,000 for a house, the amount might be 300,000. But we're talking about the structure itself and replacing it with like materials, and not the land, right? They're not counting the land in the estimate. So typically, I do like to take a peek at the SDAT, the Department of Taxation, to see, like, all right, is this correct? You know, is this an accurate number? Because they do the improvements in the land.
Got it, got it. No, that's good. Good to know. When there's, for everybody that's listening, your insurance policy doesn't cover the land, like the dirt. What
Correct.
what what Craig mentioned, because you don't necessarily need to, like, in regards to that, because that's not going to. I've never heard or seen of like dirt disintegrating, so to speak, from from it being burned. But a house, like if a house burns down, like Craig mentioned, it's the cost to actually replace the home. Uh,
Sure. Yeah.
and to rebuild it. And so, like, now I'm going to move into the policies, right?
Sure.
So, if I'm looking at my current policy,
Uh-huh.
what should I be looking for? Like, what are some of the common mistakes that you see, and like misconceptions around the actual policy? Like,
I think that it is very important to have an insurance agent that's going to explain things to you. Because I think where there's a lot of confusion that lies in, I mean, just like you in your lender in the lending business, like, people need us to explain things in a way that they can understand them. One of the things I see that typically, the biggest issue is people think that they're covered for something and they're not. And so one of the biggest things that I tell people to look for are water endorsements, right? There's very little coverage for anything relating to water, right? So with these endorsements, like water, sewer, and backup, that's going to be for any sewer discharge coverage, like there's seepage. So if you were to have a hidden leak and it was leaking into your walls and caught this, so you gotta, and there's no flood policy is a separate policy. So I would say the biggest, I don't want to say mistake, biggest misconception that I see people have is assuming that they're going to be covered. And the important thing to know with insurance policies is there's really two kind of policies. HO2, which is a broad policy, which will essentially only cover what's named in the policy. So if it says, it'll tell you it covers rain, hail, lightning, fire. And then there's HO3 and every other policy. So HO3, HO8 now, HO5, and those are, they cover anything unless it explicitly forbids it in the contract. So there's two kind of policies. Most people, most companies is HO3 is their standard, but that's the typical biggest mistake I see is people. And listen, it's hard to know. You got to have someone to navigate these waters because the way these things are written, it's easy to not understand everything that's being put in front of you. But yeah, that's typically the biggest mistake I see people make.
Gotcha. And then like by adding these different pieces to your policy, like coverage, so to speak,
Yeah,
does it make it like a lot more expensive, or is it affordable like each thing you add? So like this water coverage that you mentioned, right? Because in my house, the crazy thing is we built our house new in 2016, right?
yeah,
And in the first week, I kid you not, the very first week that we lived in our house, we had a backup.
mm,
And the reason we had a backup is because there was all kinds of gunk and what do you call it, dirt and things like that from the construction
right.
that had blocked the pipe.
Oh
And
God, yeah,
so, Craig, thankfully, we had
hmm,
only been here a week.
yeah, yeah,
So there wasn't a lot, you know what I mean?
yeah,
And so
yeah.
it hit a small portion of the basement. And I went ballistic. Like, I'm like, there's
Sure.
no way I should be living in this house for 1 week and this happening. It's a brand new house, right? And
Yeah.
so we called the builder, and the builder's like, call your insurance company. I'm like, no, nah, nah, no, we're not doing that. Like, you're gonna come and take care of this. There's no
Yes.
reason for me to call my company. So I say all that to say, uh, uh, I came home the next day. It was the builder and two utility companies and a plumber in the driveway, and they were all like,
Yeah. Yes. You.
pointing the
Yeah.
finger, and so
Yeah.
I walked by. I said, "Y'all have a great day. Let me know what you figure out. I'll be inside."
Yeah.
And so the reason I'm telling you this story is because that gave us a bit of a spook, like a scare, like, all right, this happened once. Okay, it got fixed, but what if it happens again? So we put all those riders on our insurance
Yeah.
policies, but I don't know, um, which I should know, the base versus by making these additions, how much extra it added to it. But I do know it's giving me a peace of mind to sleep. And I also know that if that ever happens again, it's covered and it's going to save us a ton of money because I could only imagine how much it costs to dig up and do all the work that they had to
Yeah.
do
For
to get that
sure.
all fixed
For
for us.
sure. And that claim, and I had someone I think yesterday who I quoted them a policy and they ended up wanting to go with somewhere that was less expensive. And I was just kind of talking to the coverage and I said, hey, I can match this coverage, but they gave you $5,000 for water, sewer, and backup. Sean, I don't, if you mind telling me how much was that? You didn't. I
I
mean,
didn't file the claim, so I don't
right? Because
know.
it's brand
Like,
new. So the
yeah, so
typical
we
water
never
claim
filed.
is eleven
Yeah,
thousand dollars,
yeah.
and it happens. It happens a lot. New builds, old builds. So like, yes, it's a bit of a pricey coverage, but I think it's all proportionate to what you could lose. Like I had a friend, a close friend, who had a $25,000 loss twice from a toilet basically backing up in his basement. They weren't home. It seeped into the floors. It is a really bad claim, and so I definitely am try to be as price sensitive as possible. I got 4 kids, like very similar to you and Karen. I got a big family, so I understand what it is to be trying to pinch those pennies. But let me tell you, nobody expects it to happen to them, and when it does, I always tell my clients when they talk to me about price, I'm very empathetic. I'm very empathetic, but I always tell them what I want is when you call me for me to say, "Don't worry, Sean, you're covered. You're good. Pay your $1,000 deductible. You know, the company ABC company is going to carry the rest." And so it can be a little pricey. The higher the coverage, and usually what they do is they'll say you want $5,000 worth of water, sewer, and backup. You want 10,000, 15,000, and then incrementally it goes up. Another really good one is buried utility lines. That's a new coverage offered by pretty much every company, and that's just going to cover the pipe that goes from the street to your home that's not covered under your insurance policy that brings water into the home. Um, that's a huge loss claim because they've got to excavate, they've got to dig up the pipe, they got to replace the pipe. So, like I said, a lot of these, especially the ones dealing with water, they're a little more expensive. But I look at it proportionally on a monthly basis. So if it's going to raise your premium $220 annually, or 240 annually, I know that it's going to be
It's
uh,
worth $20 a month if you can afford it.
exactly, exactly, $20 a month.
Yeah,
That's how I like to look at it. So
yeah. Because
yeah,
we had to go through that, and they ended up tearing up half of my driveway, right?
yeah,
So they fixed the driveway, but they repaved half of it. They didn't pave the entire thing.
right,
So
right.
so like I had a
Yeah,
two-tone driveway.
sure,
And
sure,
so like you don't think about like even some unintended consequences
sure.
too as well, and
Yeah,
additional costs that you would incur out of pocket to make things go back and look the way that they should look after the coverage. And so
yeah,
or after the event. So thanks for that. Like, all
yeah,
right, so give us some tips and sort of tricks on what to think about. Like, for instance, are there ways in which I should be looking at my policy and like, you know, if I get to save money or ways to get the best policy. For instance, if I bundle my auto insurance or if my credit is a higher level than
yeah,
and things like that. Like, what are ways in which we
yeah.
can get better insurance coverage
Sure.
as well?
That's a good question. So they do correlate credit to, I guess, stability, and it will put you in a different tier, more so for auto, but also for home. Um, there's a bunch of companies that do soft pools for credit, and that determines whether you're in a mutual company, which is the better tier pricing, or the standard company. So that, or excuse me, they call it non-standard company. So that's important. Credit's important. You want to look at little things that are going to make your house safer. Security system. If you're in the newer build, sprinklers are always a plus. That's a discount. Going green somehow. If you have a solar panels or a green roof, that's going to be a discount. Age discounts. If you're a veteran, you get a discount. Um, you know, one important thing, and I don't know if we're gonna get to this, but I think we will. Initially, is you really want to have somebody in your pocket, like I said, like an agent, your agent, whatever, that you can call and ask. Because one thing that people don't understand is if you call, say you got a leak in the roof, a small leak in the roof, and you call your insurance company and you say, "Hey, got a small leak in my roof. Can you send somebody out to take a look at it? Not sure if it's worth filing a claim, right? If your deductible is $1,000 and the damage is going to be 2,000, it's not going to be worth filing a claim. But let's just say they send someone out, or let's just say, you know what, you change your mind. You open the if you move forward or not, that claim is going to be on your record. And if you ever try to move to a company and Typically, it's 3 to 5 years. That's going to be there, and that's going to hinder you. And if you move to another company, you're going to get surcharged. So one of the things I always say, tips for saving, is call your agent and discuss the claim before you ever put it in. Don't put in the claim first, and always get your own adjuster. Always get your own adjustment. If you have damage, don't call the company to send somebody. Always get your own adjustment. If it's a licensed professional, 9 times out of 10 the company is going to honor it. But you can really save yourself a lot of grief if you do that.
Wow, you know what? That is a gem, Craig. I never thought about get your own adjuster. I
Yeah,
just thought that that was a part of the process. You had to use
yeah.
your
No, get your
insurance
own
company's
adjuster.
adjuster. Okay, so you get your own adjuster, and then
Hmm.
they'll reimburse. So you pay that cost up front out of pocket.
Yeah, you paid up front out of pocket, or
And
like most
typically,
people.
typically, how much is it?
Well, for an estimate, people charge $100.
Really?
Yeah,
So
for
it's not. We're
estimate.
not talking thousands of dollars.
Well, I'm
Okay.
talking about, like, if there's damage to your roof, that's going to be one of the most typical. You lost a couple shingles, and you call someone from a roofing company for an estimate, and they go up on the roof and they say, all right, you know, most of this is not compromised. It's $2,000, right? And your deductible is sitting at $1,500. It makes no sense to file that claim. But the genesis of you filing that claim with the company is going to cost you money with the company. It's going to cost you a surcharge. If you ever move, it's going to be on your record. So, yeah. So what I'm saying is, get your own adjuster, 100%. Because if he brings you back and says, "Hey, it's $2,000," you're going to say, "All right, well, I'll just pay this out of pocket." Right? You don't got to worry about filing a claim. You only want to use that insurance if you have to, but that's going to save you money. It's going to save you grief. Right? So always
Okay.
get your own adjuster first.
Okay. Okay.
Yeah.
So now that we're talking about claims, like
Yes, sir.
take us through the claims process.
It's gonna be different for every company, but again, you want to talk to your agent before filing any claim. I always tell my clients, call me before you file a claim.
So can
Call
you
me.
tell us a situation that you recently had, like where one of your clients may have had to file a claim? Tell us
Sure,
what it was,
sure, sure.
how that transpired and what that process looked like for that client.
Absolutely. It's actually like a longtime friend of mine. Um, she hit me up. I put her with Progressive at the end of last year. She hit me up and she was like, "Hey, we had some storms. The storm that blew through here the other day, I knew exactly what she was talking about because we don't live too far from each other." She said, "I think it blew a couple shingles off and there's a leak." I said, "Okay." I said, "Hey, don't call the company, call an adjuster. Call an adjuster and get an estimate." So a week later, she called me back. She said, "Hey, it's looking like he says they need to replace part of the roof. It's going to be $11,000." I looked at her deductible. I said, "All right, your deductible is $1,500. You need to go ahead and file that claim." So they're gonna cut her a check for, what is the difference? 950, 9,500, and she's gonna be on the hook 1,500. She called Progressive. She gave them a copy. They of course send an adjuster out, right? They're gonna do their redundancies. They're gonna send an adjuster out to look over the estimate. They may disagree. You may have to go back and forth a little bit, but ultimately at the end of the day, they paid the claim in full for her. And that's typically how it goes. But you always want to have your agent in your corner. Now, after the claims filed, there's always a claim department, but and in the initial, you want to try to handle as much as you can by yourself or in concert with your agent, because once you let them know something happened, it's on the record. Oh, you had water damage. So it's an important thing to remember, and I always tell people, call me first.
And about like from start to finish until you receive a check in that situation, how long
Mhm.
will it take her to go through that claims process from the time that she made the phone call and did an official claim?
Yeah, I think she's done. I think it was probably maybe a month. They try to get those things done quickly because, especially with the roof, the longer it goes unkempt, the more damage it could sustain, in following years. And they want to wrap it up and kind of stop the bleeding as fast as possible. So those claims do go pretty quickly, especially if there's significant damage.
Got it. And how involved, Craig, do you have to be in that process as an
I'm not
agent?
that involved. Like if a client needs me, I'm there. I have a service department that deals with the claims, and then I'm a broker, so I'm the like I'm managing everything. Of course, like if I know, knock on wood, I've never had a client be like completely displaced from their home, but if I know that like my friend, I called her halfway in and said, hey, like, how are things going? Are there any issues? I just let people know, call me, because occasionally, we do got to get on the phone and fight for our clients, and that's just part of our job.
Yeah, yeah. And so, how often, speaking of these policies,
Mm.
how often should we be reviewing the policy? So, should I be reviewing it myself or with my agent, or both?
That's a great question, Sean. So I would say you review your policy annually. That's when your home policy, that's when it's going to renew. Um, you know, I think you review it, the client should review it, just breeze through it and make sure there's no changes. If there's any significant change, I mean, listen, the price is always going to change, right? Inflation's crazy right now. It Everything's going up. So that's typically the first thing is like, hey, my premium went up. Why did it go up? That's cool. Why did it go up? Price of materials went up. There's more damage to homes than your zip code. Risk assessment, it went up. But typically clients should review it annually, just take a look at it. And if I see a significant amount of premium change, I'm gonna look through it. Otherwise, if you see 5-10% increase, that's not crazy. It's just kind of how things are.
Got you, got you. So we should be reviewing our policies annually.
Annually. And when I say review
Okay.
them, you're not looking at everything, but most companies have what's called an inflation guard on the homeowners policies. So you know the numbers, your the dwelling coverage that's needed on a home is always changing because of that. So since most policies have inflation guards, that's why I say just breeze through it, check the dwelling coverage. A lot of times people call me like, hey man, I think this is too much. It went up this much. I think that's too much home coverage. I'll review it then. But yeah, I would say annually, every policyholder should look.
Got it. I have a few more things. So is
Yeah,
there
shoot.
a sort of a knock on changing carriers? So just now, like I call you at the end of the year
Mhm,
because we're reviewing my policy, right?
mhm,
And I have one carrier that is going up on my policy, but now you can find me the same level of coverage
mhm.
uh, elsewhere for less cost. Is is that an issue? Should we be looking to do that, or should we be trying to stay with the same carrier that we've been with? Like is that frowned upon by switching from
That's a great
carrier to
question.
carrier?
It is frowned upon by the carriers. Um, Listen, I don't want to move people unless I have to, because your tenure does affect your rate. If they see
Okay.
that you've been a long-standing care, good paying client, at Geico, you've been there for 5-6 years, and now you're gonna move. It's more likely you'll get put into the mutual company. Um, Now, I mean, essentially at the end of the day, you don't want to just move because price, right? I understand price is important. It's the big thing for everybody, but you don't necessarily just want to move because of price. And I always tell people the price is always going to change, right? I'm here to help you manage your policy, but more importantly, manage the expectations. So I never tell people that their premium is going to go down, because 9 times out of 10, it doesn't. If your premium's going down, you should go to Vegas and play the numbers next day, right? So I always say. So one of the important things as an insurance agent is, yes, we are concerned with price, but we got to manage expectations. And the expectation is right now everything's going up. Not, your insurance is no different. We just want to help kind of manage this, right? Like, and how do we manage it? Well, maybe your car's a year older, right? And you can afford to move your deductible up to save you some money. Or, you have a third car in the house now. You bought like a beater, a junker, and now you don't need rental car coverage. So like there's ways to like adjust your policy to try to save you some money when things happen. But you should try to remain with your company. I mean, some companies right now are taking like a beating, and I can't blame somebody if I'm getting them, saving them $100 a month. But in general, you want to try to ride those things out because it's going to help you in the long run.
Got it. So we've heard credit,
Hmm.
uh, tenure
Hmm.
can help you get discounts. Are
Hmm.
there any other things that help with discounts, like bundling services or anything like that? What else?
You can bundle in service, driving record, defensive driving courses. Every company has telematics now. They're going to give you a discount for doing telematics. So any app you download on the phone that kind of helps you monitor your driving habits and stuff like that. You're going to get nowadays also get any discount anytime you do anything paperless. You're going to discount for going directly, typically for most companies, going directly through your checking account. So there are a bunch of ways to get save some money there.
Okay, sounds good. Last two questions for you.
Yes, sir.
Let's talk about condo and
Hmm.
investment property coverage.
Okay.
So there's been a lot of people, based on affordability or whatever their circumstance is, they're moving towards condos, or even folks are moving out of town and they're want a different life where they don't have to worry about mowing the grass and you know uh, just
Yeah.
certain maintenance on their
Yeah.
houses and stuff. And so they're living in a condominium. So we
Yes.
often have the conversation about the difference in policy. Like so. Can you talk to us about kind of what the differences are for a
Uh-huh.
condo policy? And then we'll just wrap it up by talking about the investment property
Sure.
insurance as well, what that looks like.
Yeah, absolutely. So condo is going to be HO6 policy. And the real difference is they call that a walls in policy because you share roof, you share what's outside of your four walls with everybody in the condo. The master policy is going to pay for um, any damage, any claims filed for those. Above $10,000 in the state of Maryland, for example, your master policy kicks in, right? So this is condo insurance is really walls in coverage. So it's really for your personal property, and that's why it's so inexpensive.
So there's
Um,
no replacement cost on that condo policy because there's a master insurance policy, right, that the condominium association has
Yeah, there's no
to
replacement cost
rebuild.
on the dwelling. On the dwelling now on your personal items, there's going to be replacement costs, but on the dwelling itself, yes, that's absolutely correct. They also have what's called loss assessment, and some homeowners policy have that if you have a HOA, but with the loss assessment, they'll give you like $1,000 a year, and that's for a loss to a common, like a common area. Like say someone ran over a sign to your condominium in their car. They may assess everybody, $100 if it's like a small condominium to get that sign fixed. And that's just an example, and that's baked into your policy. You don't pay for that, and you don't pay a deductible on that. And so
Got it.
typically those deductibles are a lot lower. They're like $500.
Got it. And then also we see the insurance coverage being a fraction of what the actual cost would be if you were buying like a townhouse or a
That's
single
correct.
family home.
That's correct.
Got it. So I'm an investor. I'm going to now take this amazing interest rate that I've gotten over the past, 2 years ago when the
From
rates were
Fortis,
like,
right?
yeah, when rates were like threes, and then some people got fortunate enough to get something with a two on it,
Yeah.
right? And so I'm going to move into my new house, but I'm not going to sell my own old house. I'm going to turn that into an investment property because the lower rate, the payment's very low, so I'm cash flowing, right?
Yeah.
And so I'm going to turn this property to an investment property. My insurance coverage has to change.
Hmm.
Um, I would assume, right? And
Yeah.
so what's that look like going from a standard homeowners policy into
Uh-huh.
being an investor or a landlord, so to speak?
Sure, it's a great question. So that's going to be HO4. There's going to be dwelling. So basically, it's like the reverse of a condo where you're insuring very little personal property inside the structure. And again, when I say personal property, it's anything, excuse me, if you flip the house over and you shake it out, anything that falls out. So that's going to be your appliances, your clothes, your furniture, your TV, electronics, stuff like that. So In a dwelling policy, you're only insuring an investor. You're only insuring the four walls and the roof, right? You're only insuring the dwelling, the other structures. You're not insuring the personal property because, in theory, or you're not insuring a bulk of the personal property because, in theory, that's a renter's policy, right? And they should be, and your renters should have a renter policy in place to cover their personal belongings. So with the dwelling policies, it's a little bit cheaper, but not, you're just the only real difference is you're insuring less personal property. Um,
Got it. Got
mhm.
oh, and another thing I have a question about
Yeah,
liability. So me as a landlord, I tend to jack mine up as high as
you
I
have to.
possibly can because
Yeah,
I'm afraid of a slip and fall, whatever it
sure.
might be, right?
Yeah.
Um, what are your thoughts about that? Like when you have conversations around the liability piece?
I always jack a liability up to 500. I never try to write anything less than 500 or a million. We live in a very litigious world. You can get sued for literally anything, anything at all. So, I mean,
And what's
that
that cover though? What's it protect you from?
it protects you from, in general, it protects you from like anybody trying to sue you due to an injury that results from falling down the steps or slip and fall in your driveway, the Amazon driver. Actually, if you get an umbrella, which is an excess liability amount over top, it actually protects you from libel. So, like, if you were to slander somebody, there was a defamation, that also protects you from that, and some liability extended to that as well. But that's kind of, I don't know if I answered your question.
You did. No,
Yeah. Okay.
you hit it. You hit it. So
Yeah.
look, Craig, man, this has been great. Like awesome. I know you're busy and I don't want to take up a ton more of your time, but at the beginning you told us a lot about, what you do, but like
Yeah.
you're a pretty amazing guy with four kids.
Appreciate that.
Like
Appreciate that.
yeah, yeah. And what like how'd you get here like into in insurance?
Um, well, first of all, thanks for all the nice things you're saying, Sean. I appreciate it. I'm gonna make sure I bring my wife up here and hear you say all these wonderful things about her husband.
You talked about it last time we were together. You
Yeah,
talked
she's
about your
awesome.
wife and kids
Yeah,
a
she's
lot.
awesome. Yeah, so I really I'm a musician by trade. That's what I grew up doing, playing music, and eventually, I ended up
Did you go to Duke Ellington?
I didn't go to Duke Ellington, but I had a lot of friends that went to Duke Ellington.
Okay, because
Yeah.
we're connected with someone, a very close friend. I won't say her name on here, and let's just say she's a drummer. And I see that y'all are pretty closely
Oh yeah,
connected on
that's my.
social media.
I already know who you're talking about. Twinkie, that's my girl. That's my girl. Yeah, she just wished me happy birthday the other day. That's my girl, man. I love her.
Okay, all right.
Yeah. So so I grew up and at a point it just came a little bit too much. I needed a steady paycheck, and my grandmother passed away, and my grandmother worked very hard her entire life to accumulate, like a good amount of wealth. And when she passed away, I felt that she was the matriarch, and I felt that her life insurance wasn't adequate. And that's when I got into understanding life insurance. And then it just kind of snowballed into property and casualty. And then, I'm a Mason, and one day my past master was like, "Hey man, I'm opening a brokerage. Like, why don't you get your real estate license?" And then once I got into the business and really understanding everything, I want to be a sponge, and I want to be able to, understand conceptually everything insurance and real estate and how they work together. So then I went and got my typic or my title producing insurance license. And I'm a notary, so I can perform closings, and I just want to be a Swiss Army knife, because I think I told you my son just bought a $30,000 car, so he ain't leaving anytime soon. So I'm gonna have 4 miles in here for a while, man. So, and that's just my kids. So, but that's kind of how I got where I am, and I took the plunge in December of last year to open my own company, and things have been good. Um, not without struggle and hustle, but we're just trying to build and grow and educate people and help people, man.
That's awesome. So speaking of which, that's part of one of the questions I ask is like, you know, what do you need? How can we help you?
Yeah,
For all the millions of people out there listening,
yeah,
how can we help you? And
yeah.
tell us how to connect with you, and then we'll get into our last question to be done.
Sure. How can you help me, man? Just send people my way. Like the company that I franchise is Goosehead Insurance, and their model is more lender and realtor based, which is why I went with them amongst other reasons. But right, like I'm a realtor and I have relationships with lenders already, and I understand lenders' pain. Like I understand what it is to try to get a deal across the finish line. I know what it takes. So I had that distinct advantage. I felt like going into it. So yeah, I mean, like one thing I do is everybody that I meet is either my circle or they're my network circle, So I built this book, right? Like I built this business. So like the people like you who are just gracious enough to, give me the time of day, I say, point to your five closest lender friends and introduce me and say, yo, this guy's great. Come, I also teach a class with Mana every other Thursday, the first time home buyers class. Like I teach insurance there. I love teaching. I love educating. I love helping. Like I legitimately do. So just get a hold of me. I don't know what's the best way to my phone number, my Instagram, my email. What's the best way, John?
That's up to you. Like
All right.
if I need insurance and to be able to connect someone with you right now, what is the best place to go? Is it your
Yeah, just
website?
call
Is
my
it
phone.
your social?
So I have a website that I haven't put completely up yet. It's ready, but it's inc-ccc.com. And that gives you a link to all of my services. But you can contact me directly at 240-425-3441. That's my personal cell. I always give it because my office phone acts a little crazy. Basically
Repeat that.
it's two
240.
425
Yep.
3441.
3441. And then
Yeah.
inc-ccc.com.
Yeah. Yeah.
Yeah, we'll be sure to put that up in the comments so that people can get to you. So now you have got to have a sense of urgency in getting that website up.
Yeah. Yeah. It's pretty much ready to go, man. I had been holding off a little bit on it, but because I do so many things, I want to make sure that I'm hitting the right market of people. But nah, I appreciate you, brother. I really appreciate the time and happy to be of service to anybody. Even if you just have a question, feel free to call me. Like I tell people all the time, if you got a better deal, like I'm gonna tell you go with them. But you know what? I know that in 6 months, you may need to come back and I'll be here.
Right, right. Yeah, absolutely.
Yeah.
So listen, I'm not gonna let
Mhm.
you off the hook that easily.
Okay.
Um, we got one last question, and then you
Okay.
can go.
Ask
So
away.
so Craig, you get one person,
Uh-huh.
one question you can
Oh, I
ask.
saw this. Oh, I didn't even think about
Yeah,
this one.
that's
Oh,
right. Who would it be, and what would you ask?
oh, man. One person, obviously dead or alive.
Yep.
Okay. One question. What would I ask? I think that's a tough question. If I'm being honest, I probably just ask my grandma how am I doing. That's it.
Yeah.
Like she was my compass. She's the one who I always went to for approval. So her approval. So that's my answer.
No, that's a great answer.
Yeah.
I'm not mad at that one at all. It's
It's probably the
definitely
easy answer. It's probably the easy
no,
answer,
it's not
but
easy. It's not no 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 no. Let's not back off from your answer. No, that's a great answer because honestly, throughout this conversation, when I
yeah.
asked you how you got into doing this, it sounds like your grandmother. and her legacy is a big part of this.
Yeah,
And
huge.
so it would make a lot of sense for you to ask her how you're doing. As somebody you care about.
Yeah,
Yeah, there's no right or wrong answer there. I've asked this question, I don't know, over 100 times so far.
yeah.
On all our episodes. In the earlier days, Craig, I used to not even give people heads up at all. And so I'd have people on here like getting
Stumps,
sentimental, and
stumps. Yeah,
it was tough for them. But then I realized that that wasn't fair, because it's such a great question, but it wasn't fair not
yes,
to give people an opportunity to think about it.
yeah,
But now your grandmother, asking your grandmother that sort of a question
yeah.
is yeah, I think that's pretty amazing. I think she would say,
Appreciate it.
she'd tell you that you're doing well.
Hoping.
Um,
Thank you, brother. Hope. I
yeah,
hope. Thank you.
I think she would. I'm sure,
Yeah,
there's some days she'd be like, "Boy, you better get your act together."
yeah. Yes, sir. Yes, sir.
But
Yeah,
that's a great question. I appreciate that.
yeah.
I appreciate that.
Appreciate
Well,
you, man.
this has been great, Craig. I
Yeah,
really
brother.
appreciate you, everybody. It'd be such a shame for me to know folks like Craig and have them in the network and not share. And so if there's anything, like I always say, if there's anything that I or we can do to help you in any way, please don't hesitate to reach out. Still remain as safe and as healthy as you possibly can. And we will be back next week with a new guest. But thanks for your time, Craig. I ask you to hang on with me for a quick second as
Sure.
I end the broadcast.
For sure.
But thank you for your time today.
And thank you. Thank you for having me. Thank you everybody for listening. And like I said, I'm here to help whatever way I can.